And Iraq's Khatib Hezbollah says it will give government until August 6th to show it can defend Iraq's sovereignty. So Amity Stein, quoting a senior Israeli official, says there are centrifuges at Mount Pickaxe, but uranium enrichment has not yet begun there.
Hey, hi everyone. Good morning and welcome to our live show. Hope everyone is doing great, guys. So, yeah, interesting session. We had few winners and one loser. So yesterday also I had few losers. So I had to reset 2 accounts or 3 accounts rather. They had less drawdown room remaining, and on this pop I tried to short, took a loss. So just was doing the reset on those 2 accounts or 3 accounts. So overall we are still bearish on this market. We have hit, if you remember from yesterday's discussion, semiconductors were getting close. I told you, right? They don't miss my number like that. So it has eventually dropped into this area to hit the weekly low. Semiconductors are weak this week. They are the reason for sell off. They have hit our weekly low. Other thing which is weak is technology. It is still getting closer and closer, yet not hitting that weekly low yet. So there's still element of bearishness we have until that happens. You cannot find a sign button. You mean join button? Can you click on this link? Exclamation join. Sometimes based on the country or geography you are in, you don't see that join button. Sammy, Indy, Blaze, MPC, welcome all. Advisor, Soul Invictus, good to see you. Click on that link, Nike. Join this channel to get access to all the perks. If you don't see join button, then yeah, maybe which country or which region you are based in. Sometimes based on the geography, Google or YouTube does not show those join button. Georgia. Yeah, then maybe in your country or region, YouTube or Google is not allowed to do business.
SIBO volatility index up 1.44 points at 19.65.
So again, chop has begun. Lost on a short, again could lose on a long now. Come on, let's catch a break.
Stub filled.
Unbelievable. Hope again it doesn't reverses on me. So it's not committing. You can see, right? Every time it moves up, not breaking out, still stuck in a range. Again reversing from the lower end of the range. You get some big sell candles, but no follow through. Yeah, market is playing tricks.
Stub filled.
Yeah, I mean, the fear is, we short here at the bottom end of the range and it squeezes again back at the top end of the range. So at least you want a little bit of pop and a rejection. So we get a little bit of confidence to short this. Because overall we know, I told you yesterday also, overall it's coming down. It's not going up without tagging this number. This is where we were yesterday, frustrated late afternoon for that short. Eventually it has happened. Same thing. This is still on the docket here to go hit weekly low. It is going to flush. Just that it is wasting time. You can see, right? It's trapping, chopping.
Stop filled.
So how do you get this shot when the range is so tight? Any reason you start at 11 daily? No, I start at 9 a.m. You just got to pay for it. There is a stream from 9 to 11 for the members only. So you come here under the live tab. From 9 to 11 I trade with the members, and 11 onwards it's free for all. There's a join button on the channel page. You can click join button to become member. It's so choppy. Oh, not worth following this anymore, as there are other traders with 1 million subscribers who will still start at market open. Again, I think your English is poor. I start at 9 a.m. You just got to pay for it. And I have seen you here. I have seen you here in the past also. So why are you wasting your time? Please go, leave. Your time is so valuable. You need to follow someone and get trades. Have a nice day. Please follow that 1 million subscriber, okay? The person with 1 million subscriber. Follow that person because he's so great or she's so great, because 1 million are people following them, right? Go. You might miss out on a good long or a good short. I just have 10,000 subscribers, right? What do I know? Can't you see he's on mission? Yeah, the name suggests, right? But I have seen this ID before also in the past. Don't get mad. He's a good guy. He's happy right now. Yeah. Thanks, Anna. Don't worry, guys. I'm in very good spirits right now.
Stop filled.
So this is what we want: technology sector to sell off, come into those lows. So semiconductors already sitting at the weekly low. Financials were strong early in the week. They hit our weekly expected move upper edge perfectly, and that's where they are reversing. Energy is trying to get back neutral for the week. So financial, energy, healthcare is overall positive. Healthcare is still eyeing that weekly expected move upper edge. So the problem area is technology and semiconductor. Semiconductors have achieved their full potential on the downside. Again, this is where after the Fed, if there are more sell off, that is where that two deviation mode we were talking about right yesterday. Once that one standard deviation is achieved, you don't get inside that range and more negative catalysts come. That's where arbitrage kicks in. Selling begets selling. That one deviation can easily turn into a two deviation mode. But technology, at least for this morning until Fed comes, we still have one more flush remaining into this area. Yeah, that's the problem, Vijay. It's not flushing. It has spent and taken too much time to do that tag. And one of the reasons why we're not able to get a nice, flush. We got the morning sell off. We were short. That's where we made most of the profit here. We got little bit of this. We took loss here. We recovered that loss. We got this nice flush. Here I got chopped out little bit.
According to Incafe Shipping Services, an explosion hit the LNG terminal at Egypt's Damietta port during cargo discharge. Philadelphia Semiconductor Index hits about a 3-month low, last down 3.9%. So furthermore in the story, the vessel involved in the explosion has been relocated outside the port. Operations are expected to resume at night time at other berths and terminals.
Yeah, it's going to take full, you know, luxury to reach there XLK. Until a Fed comes, it will utilize entire 1 hour now or two.
Stop filled.
Hmm. It's a very slow, gradual sell going on. Bit risky also because again you can see right for every drop there was a pop, drop, pop, drop, pop, drop, pop, and I don't know. It's very sluggish, slow, risky to at least use the big size. Yeah, once FOMC comes at 2:30 press conference, it should hopefully start moving well.
According to two security sources, Egyptian gas storage tankers at Damietta port might have been hit by drones.
Top of the hour coming.
According to Ambury, a US owned and operated Marshall Islands flagged LNG floating storage facility was struck by at least one unmanned aerial vehicle, so UAV, whilst at the Damietta port in Egypt. So furthermore, from the Ambry security company, no party had claimed responsibility, no casualties, and damage to port infrastructure has been reported.
Yeah, it's not going anywhere, guys, until that tag happens on the downside. This market will continue to more downside. Yes, today after FOMC we don't know. It's binary event. After FOMC anything can happen. I mean, you need really more negative catalyst, because whatever negative was there, we are achieving the downside. XLK on the downside, semiconductors on the downside, Nvidia negative on the downside. Yeah. So full potentials are already reached on the downside. After the FOMC, yeah, there is room on the downside for Nasdaq to come. Yeah, but to even go past that, you really need a hawkish Fed. Missed earning on Microsoft and Meta. There's a lot of catalyst here which could go wrong. So yeah, not so bullish as of now on this market. So there's the flush we are
The
looking for.
Nasdaq 100
Will
extends
not be
dropped
part
to
of it.
1.5%. So your stocks extend fall, the S&P 500 down 1%.
So are we shorting this or are we okay with this low as of now? Long, so one thing, logical thing which has happened is ES has reached its daily low. So there could be reactionary bounce here. So I don't want to short it. This is our experts level for ES. But for Nasdaq still there is some room on the downside. Top of the hour. Maybe this bounce is more to do for top of the hour. So has technology and your level got hit? Yes, absolutely. That's why we were short. That flush has brought this into right into our weekly expected move leverage. It's going to happen, guys. It's I told you since yesterday late afternoon, right? It's happening. It cannot miss my number like that and just go back up. It might have temporarily gone back up into end of the day yesterday, but came right back into it now. So is this over? No, we don't know. Things are bearish. Yeah, temporarily we could again bounce, but overall we still have a lot of room for Nasdaq to come down. So yeah, we are still net bearish on this market. So yeah, there are no longs here, just sell and sell. Yeah, you're reaching one right now. Solely Invictus. Yes, there is one NPL coming on the downside for yes. But I think the main tracking you should be doing is for Nasdaq now, hitting next masters level and the next weekly expected move lower edge. That's our Nasdaq daily low giving the reaction. There is reason for everything, guys. Consider becoming member if you want to get access to all this information. I share it. It takes a lot to prepare this information. So that's why I said, right, when we are selling off, there's still some more on that pop. I said, right, still coming down. Daily low is not yet hit. Now daily low is hit on the Nasdaq, and it is getting a reactionary bounce of that daily low.
Stop filled.
Remember, our eventual destination is Nasdaq going into the weekly low with FOMC, or after FOMC we are coming into 27,142. That is our weekly low. So how do you like that reaction from our daily low? That's our Nasdaq's daily low. And it is to the penny. Remember what number I had mentioned to you? It was $413.50. You want to see it? Look at that, $413.50. Look at that reaction. and it is completely reversing the market. No big deal. Daily low reversing the market. Guys, Wednesday low 1. That's our Wednesday low 1. I told you, right? It is heading into the daily low. That's our daily low, $413.50. And look at this rally. $4,096. It is written here. 4096 ticks. It's just a coincidence, Blaze? Yes, you're right. So yeah, a couple of things happened, right? First, as I mentioned, right, in the morning, the first sell-off was brought to you by semiconductors, which had missed our weekly low yesterday in the pre-market. It flushed in the morning. We got that sell-off done. You're not bouncing. You're spending time here, which means second in line was technology, which also, by the way, had missed it yesterday, gone back up, coming right back into it. And again, giving a reaction right from that weekly low. The third thing, as I mentioned, right, that daily low on the Nasdaq was hit. Once you hit the daily low, look at that, guys. And by the way, yesterday's close also, you remember, right? 900 was the number. Your finish was right at here, 922. 922 was yesterday's finish. This was priced in daily low, and that is where the market is reversing from the daily low. Look at that reversal from that daily low. The reason it straight away rallied into this area is because this is our masters. Come on, guys. Everything is for a reason in the market. And the reasons are known well in advance, a day in advance, a night in advance at least. And in case of our weekly, a week in advance. I gave this number last Sunday when the market were not even moving. They were close. I put that number on board last Sunday for my members. Same thing. Put number on the board last Sunday. Google was up this week. Look at that. Still sitting at the weekly expected move upper edge in spite of this sell-off. Financials reversed. Exactly from our weekly expected move upper edge. Reversing down. Healthcare still up. It is still going to go and tag that weekly expected move upper edge. Yeah, so great reversal there. And so great reversal, and I just showed you, right? It is our master's level. That's where it magneted back. So are we going long here? We might.
IRIB citing Israeli media say a US ship was damaged off the coast of Egypt, and reports suggest that the incident was the result of a drone attack. So again, we have reported this earlier from Ambry as well as from two security sources. OpenAI CEO Altman discusses a new AI model with US lawmakers, expresses support for AI safety bills and gives no details though.
Level I'm targeting is another experts level from yesterday. So you got to become member to understand the full-fledged concept. So yeah, I'm targeting the next number. So basically we are expecting a little bit of chop here, like we had similar kind of chop to happen here, at least 1 or 2 rotation. So it is our scalping zone. Like we got a reversal from experts level here from Wednesday. There's one more experts level here from Monday and one another expert level from Tuesday. So they act as our scalping zone. Obviously we have a resistance here. If we cannot clear, this trade might fail. We have a resistance here. to break above. So if you break this resistance, then you will have it. But we are expecting little bit of back and forth price action. Just like we had on the way down, we had little bit of back and forth action before we drop, retest, reject. Same case, rallied, come back here, expect little bit of back and forth consolidation, gather the energy, gather the open interest, and then maybe break higher or break lower. There's that push here. It's algos, they move the market based on those calculated numbers. They are not looking at the moving averages, they are not looking at support resistance. It's the bets are placed in the market well in advance.
Egyptian security
Market
officials
response
who have
based on
denied
the
the
bets.
Al Hadath channel that there was an attack in the port of Damietta, claiming that it was a fire that broke out in the engine room of a decommissioned ship. So again, this is in conflict to the Ambry Security Company reports that a US-owned and operated LNG floating storage facility was struck by at least one UAV. So again, Egyptian security officials are denying this, claiming that it was a fire that broke out in the engine room of a decommissioned ship.
So you can see, right, could not clear our resistance, rejecting. Stop loss should be below this area for us. 49 and below will be our stop loss. Yeah, so hopefully we get our target here. Again, resistance in between. So why are we not taking profit? Because there is another reason. We are watching ES correlation also, which is fine. It is holding its level. It rejected its masters. Could go back here one more time. You got to be patient here to break this area and get into that zone. But yeah, that is our first target we could have taken profit at.
In 10, to keep in mind, in 10 minutes' time now, at the top of the hour, US Energy Secretary Wright is due to be speaking.
So I told you, high likelihood that we will at least come here and chop little bit, just like we did here on the way down. On the way up, we're doing the chop. Oh, he did tell that. Yeah, expecting some chop here. Yeah, need a pullback to go long. We're starting to clear some of our levels, so more levels to go on the upside. We'll add more if it pulls back. Keep the size small as we are chasing this market at the highs.
Barack Rabbit from Channel 12 News says a senior official from one of the mediating nations says that the one making the decisions is the commander of the Revolutionary Guards of Iran.
Stop filled.
Thanks, Pawan, for that reminder. Top of the hour. That's why I brought my stop loss close. You don't want this to reverse again. So guys, Lucid has also gone take profit traders path with their daily payout accounts. They are now live. Daily payout, no cap on the payouts on day one, no consistency rule, as much money as you want in the funded account and get the payout on day one itself. Evaluation is 2 days to pass, just exactly same as take profit trader. $15,000 in payout, before which or after which they will move you to the live account. So same, even better. Check them out. So Nasdaq is reversed from its daily low. $413.50 was the low for our daily experts level. Nasdaq's final low today is $409. So it was, whether it was like Monday's close at our masters level, Tuesday's close yesterday. Remember 900 was the masters level. We closed around 922. Today's daily low is marked by our experts level, daily experts level low. The numbers are spot on.
Just a heads up, US Treasury Secretary writes, currently speaking live now. Also heads up, White House economic advisor Hazard, currently speaking on CNBC, says we expect Wash to do the right thing.
Trading is
So we have posted out the video of Bloomberg TV on the feed for you to watch. Chris Wright, the Energy Secretary for the US, on the feed. Apologies, we'll get the right one out. Hazard says there's no reason for US debt to be downgraded. And in the long run, the budget is moving in the right direction. And as stated, we have posted out now the correct video of a US Energy Secretary Wright speaking. Just before we posted it out, they did have technical difficulties. He might just come back on there, but the interview's just cut short. And NG Secretary Wright is back on the interview on Bloomberg TV. Asset says we expect downward pressure on prices.
So it's going non-stop, obviously squeezing shorts.
That concludes comments from Hassett on CNBC.
So what a reversal, guys, from our experts level. Daily low was hit, and at least it proves that, right, market went down for that daily low. There were a couple of other things it achieved on its way down. We saw, right, semiconductors hitting our weekly expected move lower edge, technology sector hitting the weekly expected move lower edge. So yeah, this is what was achieved on the downside. We hit our weekly low on semiconductor sectors, technology sectors, and the daily low on the Nasdaq. And that's one of the reasons why we track all these products, because everything is related in the market. Market sell-offs this week because of the semiconductor and technology weakness, especially semiconductor, was more weaker than Nasdaq, and rightly semiconductor hit our weekly expected move lower edge first, then technology hit our weekly expected move second, and then came Nasdaq hitting our daily low on the experts. Obviously, masters were in between milestones where we got some good opportunities to take profit.
Energy Secretary Wright says 13 million barrels a day of oil are leaving the Gulf region over the past week. So again, 13 million barrels a day of oil are leaving the Gulf region over the past week.
Yes, FOMC interest rate announcement at 2, press conference at 2:30 p.m.
Quantitative News, citing Syrian sources, reported that Israeli army launched an artillery attack on the area around the town of Abdin in Yarmouk Basin region near the province of Dara. Again, according to Tasman News, Syrian sources reported that the Israeli army launched an artillery attack on the area around the town of Abdin in Yarmouk Basin region near the province of Daraa. Energy Secretary Wright, in regards to the 30 million barrels of oil leaving the Gulf region over the past week, says half of that oil is flowing through pipelines. And SPI is a long way from operational minimum. So a reminder, in about 9 minutes time, or 8 minutes time, we get the Bank of Canada meeting minutes.
So guys, today is the last day for Apex 100k trailing drawdown account. $59 all in, no activation fees guys. 90% off for all the legacy account. They are also available only until today. Not sure if the deal will continue. Remember, this legacy accounts were introduced for limited time only until July 29, which is today, Wednesday, last day. And the 100k account, live trailing account, are $59 all in.
Is escorting oil and gas through the strait.
$59 all in, no activation fees. You pay upfront $59, that's it. Get funded in $59 for 100k account. Deal ends today. Today is the last day. Another great deal is Lucid has introduced daily payout account, exactly same as Take Profit Trader. No payout cap, no consistency rule. Day one get payout, make as much money as you want. After 15,000 in payout from the funded account, you are moved to live account. 2 days to pass. Same as Take Profit Trader. I think evaluation are end of the day drawdown and funded are live trailing. Five minutes ago now to get the Bank of Canada meeting minutes.
concludes comments from Energy Secretary Wright. One minute ago now to be the Bank of Canada meeting minutes. Ten seconds. So Bank of Canada's head of the Bank of Canada July 15th rate statement says some government council members were split over sustainability or rebounds. Also, potential risks to growth include failure of businesses to continue to adapt to tariffs, reduced resilience in consumer spending, and stored housing markets in major cities. Given resumption of growth and easing inflation, members agreed that trade-offs facing monetary policy had diminished. Despite this, members agreed uncertainty was still high in part due to unpredictability of Middle East conflict. Members saw limited evidence that higher oil prices were spilling over to the prices of other goods and services. Members agreed to reiterate in their communications that they would not let higher oil prices lead to persistent inflation. But members felt the longer prices remain elevated, the bigger the risk that the inflationary effects broaden. Some members were concerned about signs of upward drift in medium-term inflation expectations, but all agreed longer-term inflation expectations remained well anchored. We have posted out the meeting minutes on the feed for you to read through from the Bank of Canada. Amber Security Company says Greek-owned and operated Bermuda flag LNG tanker was struck by at least one drone while alongside at Egyptian natural gas holding company at Egypt's Damatia port. Amber also adds that the strike reportedly caused a fire on board of the Greek-owned and operated Bermuda-flagged LNG tanker. So ahead of the US interest rate decision where the Fed is expected to keep rates on hold
Stop,
at
Phil.
3.75%, looking at some commentary then ahead of the data, Goldman Sachs say market pricing implies roughly 40% chance of a hike, making either a hike or a hold an unusually large surprise by historical standards. The uncertainty reflects Chairman Walsh's different approach, ambiguity around his own preference, recent divisions within the FOMC, and renewed Iran escalation during the blackout period. Even so, most voters appear unlikely to support a hike after softer June inflation data, particularly at a meeting without a summary of economic projections, where a surprise move could lead markets to infer a broader tightening cycle. Despite the rebound in oil, the effects of tariffs, the war, and AI on monthly inflation are expected to fade, leaving core inflation soft enough for the Fed to remain on hold through the year end.
VWAP did get tagged. I thought VWAP was not tagged. There was still some more room left for the VWAP. How about calling it as a ES master's level rejection, which was perfectly tagged? Yeah, our master's level front run VWAP. It will happen. Eventually, it is going to happen. That's why I'm still long. But as we get more closer to the FMC, I think we should try to close this trade now, because it may stall here as we get closer to 2 p.m. Okay.
So, in regards to the headline posted out earlier of Tesla News citing Syrian sources that the Israeli army launched an artillery attack on the area around the town of Abedin, the Yarmouk Basin region near the province of Dara, being picked up by some of the other news channels, such as Israel's Channel 12, reporting that the IDF carried out an artillery attack in the rural area of Dira in southern Syria. But they're also citing Al-Mayadin.
Stop filled.
Expected choppy zone for us here.
XAI said they're introducing Grok 4.5. SpaceX says Grok Voice Think Fast 2.0 is priced at 8 cents per minute of audio. So again, the Grok Voice Think Fast 2.0 is priced at 8 cents per minute of audio.
I guess we are going to wait until FOMC now for the market to open up from this tight range.
Ten minutes ago now, until we get the US interest rate decision, forecasted for no change. Prior was 3.75%. Alongside that, we get the FMC rate statement, and then 2:30 p.m. Eastern Time, we get Fed's Walsh's press conference. Just looking at the last bits of expectations then from investment banks, Wells Fargo says Kevin Walsh's second meeting as FMC chair is expected to result in another hold, with the committee waiting for more data before deciding whether its hawkish bias is justified. Employment and inflation have both come in softer than expected since the last meeting, supporting patience, although the recent rise in oil prices keeps the inflation risks alive. At least two hawkish dissents are likely, most probably from Laurie Logan and Beth Hammack. They also add that with no updated SEP and Walsh's favouring a less is more communication style, the statement and press conference are unlikely to deliver major new signals. He's expected to stress that policy is well positioned to await further information and that the committee remains committed to its inflation target. The key focus will be any indication of what would trigger a hike, particularly through the next inflation reports, while the base case remains for rates to stay on hold as core inflation gradually slows.
In 5 minutes' time now, at the top of the hour, we are expecting the US interest rate decision. Forecast for rates to remain unchanged at 3.75%. With this, we also get the FOMC rate statement.
Just 4 more minutes to go for the FOMC interest rate decision.
One minute remaining. I'll lead with the US interest rate decision. Ten seconds. No change, no change. Rate remains unchanged at 3.75%. So the Fed votes 9-3 to hold the benchmark rate unchanged. Fed's Hamak, Kashkari, and Logan dissent in favor of a rate hike at this meeting. Other than that, the Fed repeats its statement here, repeats that the committee will deliver price stability, repeats that job gains have kept pace with the workforce, repeats that economic activity is expanding at a solid pace, and repeats that inflation remains elevated in part due to shocks. So we're looking to the markets here, some strength in the S&P 500, weakness in the dollar, as this time there is only 3 dissenting votes looking for a rate hike at this meeting, again that being Hamak, Kashkari, and Logan, but the rate overall remaining unchanged.
Yeah, do not short this.
Treasuries pair their drop after the Fed leaves rates unchanged.
Looking to go long.
Elsewhere now, FAR's news citing Arab sources saying Israeli forces are advancing towards Al-Raqad Valley in Syrian territory. At the same time, the regime's artillery is shelling the western outskirts of Daraa. Spot gold jumps more than 1% following the US Fed decision, last up around 1.2%. US stocks pairing their losses after the Fed keeps interest rates unchanged. The S&P last down 0.18%. So to the markets, the dollar and bond yields did see some weakness following the Fed rate decision there. S&P 500 saw some strength coming through. Fed swaps no longer fully pricing in a September rate hike.
Stub filled.
So ES is diverging, ES is backing off. Nasdaq as of now looks okay for a new high. Yeah, typical Nasdaq behavior. Almost about to win that trade. It was break even and they go all the way down to hit all the stop losses. So let's take a stop. We'll re-enter once they are done hitting the stop losses. What? You don't want my stop loss? You almost kissed it.
In 10 minutes' time now, at the bottom of the hour, we are expecting the FOMC press conference with Chair Walsh. We do have the live video on the calendar. We'll get it on the feed as well.
There they come for it. One more time.
Stop filled.
Yeah, it could still bounce from this area. It is retesting previous top. Previous resistance could act as a support. Just want to make sure that it is settling before.
Stop filled. Stop filled.
In 5 minutes' time now, at the bottom of the hour, we are expecting the FOMC press conference with Chair Walsh. We do have the live video on the feed for those interested. CNBC reporting that OpenAI's Altman is to meet with White House's Wiles this week ahead of the AI framework deadline. So Altman is going to be meeting with a range of senior Trump administration officials, lawmakers and economists to discuss OpenAI's upcoming models. One minute remaining until we expect the FOMC press conference with Walsh.
Good day. My second FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission-focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We've begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks, or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal, and where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Let's start with Steve.
Thank you for taking our questions, Mr. Chairman. You've had a couple months now, or 9 weeks, or whatever number it is, to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me, what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message.
Stop filled.
Letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare on our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so, I'm sorry, it's your question. So, interpreting markets is an imperfect business. We central bankers, like market pros, can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor markets solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw three dissents. Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much. Not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead, but I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data, which surprised some a couple of weeks ago.
Hi, Chairman Warsh. Thanks. Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. It suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction, or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. The 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Thank you, Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. But I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made to the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we've made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. But we're trying to understand is to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months we're going to refine that view and have a better judgment, and we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions, and I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. How do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. But they matter more, what are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, which is I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them. In the next couple weeks, I'm going to be doing a check back in. I've given them time to sort of think hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Nick Timmeros of the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
Yeah, so let me go back to first principles, Nick. I don't believe that either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business CapEx in around AI, it's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets in the intermeeting period weren't reacting to us. They weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves how restrictive the Treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? Yeah. What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we were saying back to us, they're giving us somewhat, not perfect, their own judgment. Surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast, we don't want your dot, we just want your reaction function, part of me hears what we really want is your forecast, and what we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, we're in crisis mode, we were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all of that information, so I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Paul Weissman. It's coming. There's a mic coming.
Thank you. When you talk about the 2% inflation target, what measure are you relying on?
Yeah, so
Stop
two
filled.
answers. First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number, we're sticking with it. Who knows come after next January what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives. Broadly, if you said to me standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more, but to achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues, what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
Mike McKee.
Stop filled.
Michael McKee from Bloomberg Radio and Television. I'm struggling a little bit with some of what you've said today, and maybe you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it, and it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah. So, believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty? So the decision we'd made today, the discussion we had in that room, was the farthest thing from inertia I can imagine. As a point estimate at this very moment, in a choice between two alternatives, you heard the results of it, but I would tell you that this discussion was far more robust, and our thinking about how best to achieve that target is advanced. And over the coming months, I expect it to be advanced much more significantly. If I were to steal a follow-up question, you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks, but we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting is an important step towards that destination.
I'd like to follow up on the task forces as well and ask, what vetting did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year to back candidates who oppose stricter AI regulation, how can the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry?
Yeah, so I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you and your listeners is we're the decision makers. The chairman of the board of the Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but not at all determined by, these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent, depth of expertise, and a divergence of views inside every committee, so they too can have a family fight. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Ann, I hear from you what I hear more broadly from households and businesses. impatience. Deliver it already. This is not an excuse, this is a fact. This FOMC, this board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job, we will deliver, we are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes, and they have tightened financial conditions in this intra-meeting period, and that has given us, that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your, I guess, faith in markets' ability to sort of make a judgment and then you to take signal from that judgment, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now? How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information. Not a determinative source, not a perfect source, but if we're trying to land the plane and deliver 2% inflation, and we take a very useful source of information and we get it all fogged up by giving it our own forecasts, by providing rolling commentary, I can assure you that we're going to have less information, less ability to land the plane successfully and deliver price stability. We're just trying to make sure that that source of information is as direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other surveys. But if you're hearing from me, we wanted to make sure we were getting a better source of information. I think in a relatively short time we are.
We'll go to Brian Chung for the last question.
Hi there, Chairman Warsh. Brian Chung with NBC News. So you said you'd be open to having press conferences when there's news to make. So today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So apparently it was news that I had a press conference. Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight, and eager to reform the way in which the Fed does policy, a keenness and open-mindedness and curiosity about that, so we have a far better chance to deliver on the remit that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer an assurance we will. Thank you all very much.
Yeah, with different kind of a press conference than the one we were used to listening to Powell. For every question there was a little bit of suspense what he will say, but at the end it's nothing which market will overreact. So is this completely going to reverse the move before FOMC, or it is going to hold and push into a new high is the question. I think we'll have a new high, but right now it is in the pullback mode. I have taken couple of stop losses. Martman, you don't like him. CJ likes him. Couldn't stand his voice and delivery, but better than Powell.
Stop filled.
looks like we are completely reversing this move. Oh my goodness, this market can come all the way into 27,560 area. $530 also possible, especially if we lose this VWAP. What a rug pull.
Stop filled. Stop filled. Stop filled. Stop filled.
Yeah, this is still coming down. If I can keep my size, of the trade down, or the size lower, I will be able to capture this move. Because of the bigger size, I am having very tight stop losses. I really don't understand this bounce. Didn't understand why that bounce was so strong. It was already totally locked for the downside.
Stop filled.
You're looking for 603. I think you got your 603 already. No relief. Just keep fucking shorting. Non-stop shots. It's a double bottom zone, guys. Be careful. Nasdaq can reverse. Yesterday's low was right over here. Maybe it is trying to make a head and shoulder or something in some time frame. So for double bottom, we need to be in 400. 413 at least for today will be the double bottom. Remember, that is also our daily low.
Stop filled.
Yeah, you're right, Srini. There's earnings, right? Microsoft and Meta reports after market close. So we'll be hanging little 4 o'clock to hear those earnings. So this is good old times. FOMC rate announcement 2 p.m. we do something, and post the press conference as soon as Powell used to be off the podium, complete move reverses. This is good old days. Are we looking for 350, 355 bounce? Depends on the imbalance, but there is a earnings. Yeah, let's check on what these two guys are doing, Microsoft and Meta. They report earnings, and this is what Nvidia is decimated, breaking our look at that retest of weekly expected move, lower edge and rejection, more downside to come. Microsoft, here's the earning, it's already headed down even to the midpoint. I think at least Microsoft is coming here. There's a lot of room here for Microsoft with that earnings release drop at least 3% into the same spot where it left off last Friday. And if the earnings are bad, oh my god, like we're talking about 9% move down, or if it is going to be good from current point, around 6% up move. So I think there's more risk towards the downside than upside, and given the state of the market, this looks like more likely outcome. Microsoft could be down 12%, guys, by tomorrow morning. Microsoft 12% down. Meta already losing the weekly midpoint. If it sells off after the earnings, there is another 10% down movement in Meta. So there's a lot of downside in this market, and overall Nasdaq, right, it's heading there. At least this is a very likelihood to happen, right? Another 350 point drop into our weekly expected move, lower edge. Technology, semiconductor sectors selling off. They're already sitting at our weekly low. They'll start to lose this area. Technology rotating back into our weekly expected lower edge. So yeah, not looking good, guys. The picture is very, very bearish. Google was the only superstar of this week so far. It hit our weekly expected move upper edge, and it was flying high. It's now coming back to that upper edge of the expected move. Picture not looking great for Microsoft and Meta. Price action is very bearish. Don't touch the longs, guys. Do not touch longs. Avinashi, fear of Fed. 3 minutes for the imbalances. Be careful, guys. Market can reverse temporarily for the imbalances. Let me make sure the news is on. Market is moving really amazing. So yeah, we'll wait for the imbalance now. 2 more minutes to go.
1 minute to go now till we get the market and close imbalance data.
We had increased the volume for that Fed meeting. It was very low volume, but if this news guy's volume is too loud, let me know. I can reduce the volume again.
Ten seconds.
Bad.
Market and close imbalance. S&P 500 sell side 750 million. Nasdaq 100 sell side 1.3 billion. Dow 30 sell side 187 million. Mag 7 sell side 233 million.
Is volume okay, guys?
So reminder, in about 10 minutes time we get earnings from Meta and also Qualcomm at the top of the hour. Meta reporting their Q2 2026 earnings. EPS estimate of $7.15, revenue estimate of $60.24 billion. Qualcomm EPS estimate of $2.22, revenue estimate of $9.62 billion, and they'll be reporting Q3.
So was the volume for that news guy readout was okay or it was too loud? I can reduce the volume, let me know. And also for the music, if it is too loud, I can reduce it. For FOMC, we had to increase the volume. It is okay? Okay. Kindly reduce, okay. Volume is fine for a few people. For some, they can leave it little bit lower volume. It's good? Okay, so far. Okay. I would say reduce a bit, okay. So I think we can reduce little bit, not much. Okay, let's complete this trade and then try to reduce the volume.
Stop filled.
Please hit the like button, guys. It's a lot of work. Trading the volatility is not easy. Taking so many decisions so quickly is not easy. Trading live is absolutely not easy. It's very difficult to trade live. By design, human reaction, our hands don't work as fast as algorithms and as fast as machine. Our emotions come in between when we have trade going negative or against us. It is very difficult when people are watching doing it live. Absolutely
5 minutes ago now to
job
get Meta earnings and Qualcomm earnings. Meta EPS estimate of $7.15, revenue estimate of $60.24 billion. Qualcomm EPS estimate of $2.22, revenue estimate of $9.62 billion. And then in about 10 minutes time, we get Starbucks earnings for their Q3 2026, EPS estimate of 65 cents, revenue estimate of $9.16 billion. Saudi Arabia is seeking to build international coalition to protect the Red Sea shipping from Houthi attacks, according to two people familiar with the deliberations. Nasdaq falling 10% below June 1st intraday record high. Also, according to two people familiar with the deliberations, the exact makeup of the coalition is not yet clear and is still being discussed with dozens of nations.
Okay, music volume could be lower. Okay, let me know, guys. I have reduced the music volume for you. For my, when I hear it here physically on the desktop, it's not loud. It's all software for the streaming platform. It has its own setting. I don't know, sometimes it is okay, sometimes it is very loud, especially when this FOMC, when we mess with the volume, that is where all things go wrong. Because the FOMC's channel has a very low volume. Every time that is the issue. Their YouTube channel has a very low volume.
I'm going to go now to get earnings from Meta and Qualcomm.
Guys, weekly expected move lower edge coming. It doesn't take long. I told you, right? Once it is decided it's going for the weekly, it doesn't take long. Look at how heavily and how fast we are coming down there.
10 seconds. Qualcomm, with their data coming through, the third quarter adjusted revenue of $9.95 billion, a beat on the estimate of $9.62 billion. Also, Qualcomm third quarter adjusted EPS of $2.21 in line with estimates. Qualcomm sees fourth quarter adjusted EPS of $2.05 to $2.25 compared to the estimate of $2.35. Qualcomm sees fourth quarter revenue $9.7 billion to $10.5 billion compared to the estimate
Microsoft
of
coming here.
$9.95 billion. They also say China OEM handset revenue reached a bottom in Q3.
Microsoft is going to drop here, guys. I'm telling you. 381.
Let's keep an eye on
70.
Qualcomm shares post-market here. Just seeing slight rise of 0.62% after their earnings. Also, Qualcomm 9M capex of $1.58 billion. Meta coming through now with the earnings of adjusted revenue, second quarter ad revenue of $59.36 billion, a beat on the estimate
Oh
of
my God. Look at Meta.
$59.07 billion. Second quarter revenue $60.8 billion, a beat on the estimate of $60.24 billion. Meta says
Look at
that
Meta,
they see
guys,
the
going into our
Meta
weekly low.
second quarter EPS of $6.18 versus $7.14 year on year, and also compared to their EPS estimate of $7.15. Also, Meta raising lower end of expense outlook. Meta sees third quarter revenue of $61 billion to $64 billion compared to the estimate of $63.17 billion. Meta second quarter family of apps revenue $60.37 billion, a beat on the estimate of $59.77 billion. Reality Labs revenue $431 million, beat on the estimate of $428.7 million. Reality Lab operating loss of $4.62 billion compared to the estimated loss of $4.45 billion. Family of apps operating income of $23.39 billion, a beat on the estimate of a miss on the estimate of $26.11 billion. Microsoft coming through now with their earnings. Fourth quarter EPS of $4.81, adjusted EPS of $4.74.
Oh my God. Microsoft is pumping.
$4.25. Cloud revenue $59.3 billion, a beat on the estimate of $58.71 billion. Revenue $90.01 billion, beat on the estimate of $87.72 billion. Operating income of $40.6 billion, a beat on the estimate of $39.02 billion. Microsoft's fourth quarter Azure and other cloud revenue, excluding FA, plus 43%, a beat on the estimate of plus 39.6%. Microsoft says $3.2 billion gain from Anthropic investment in Q4. Fourth quarter
going for the upper edge,
intelligent cloud
Microsoft.
revenue $39.31 billion.
Meta going for the lower edge.
$17 billion. Azure, and that's also with their just looking at some other bits now. So they say Azure revenue surpassed $100 billion.
Look at, guys, two
Microsoft
different
fourth
tails.
quarter 365 consumer cloud revenue increased 24%.
How good
Also say
are those
Microsoft
numbers, guys?
365 Copilot reached over 30 million paid seats.
How accurate and how good are those numbers? Look at that. Meta missed, whatever. Who cares, right, what the earning is? What matters is the
Meta
reaction. It is
expects
headed
third
into the
quarter
weekly low.
2026 total revenue to be in the range of $61 to $64 billion.
How are we doing on Nasdaq? Nasdaq, guys, Nasdaq coming down into the weekly expected move lower
So
edge.
seeing shares of Meta falling 5.6% after reporting Q2 earnings.
Oh, Microsoft is flying high. Its reaction is very good. Meta, no doubt, it cannot. Nobody can
Seeing
stop
shares
it.
of
It is coming
Microsoft
here.
up around 3.3% after their earnings. Qualcomm shares down 5%
Going into the weekly. I told you, right? Somebody asked, what is the? I told you, right?
Seeing shares of
142.
Meta now down 9% after their earnings report. Microsoft says that Xbox content and services revenue fell 10%. Qualcomm also sees fourth quarter revenue between $9.7 billion to $10.5 billion compared to the estimate of $9.95 billion. So it's waiting on earnings from Starbucks. Right, the EPS estimate is 65 cents, revenue estimate of $9.16 billion. Microsoft fourth quarter capex of $35.8 billion compared to the estimate of $35.22 billion. Fourth quarter capex including leases of $41 billion compared to the estimate of $42.05 billion. Starbucks with the earnings coming through now.
Oh my God.
So third quarter net
CJ
revenue
Chang
$9.3 billion.
sold Microsoft option and held Meta.
$6 billion.
It's binary. Earnings
Third
are always
quarter comp
binary.
sales of plus 7.9%, beat on the estimate of plus 5.73%. They also raised their fiscal year guidance for 2026.
Okay, but eventually it's going to get here. Meta, one more small pop before it
Starbucks
rotates
sees
down.
year global comp sales growing
Nasdaq coming here.
6%. Starbucks third quarter adjusted EPS of 85 cents, beating on the estimate of 65 cents. And they see fourth quarter US comp sales at least plus 6.5%, beating on the estimate of plus 4.81%.
Alright guys, I'll leave you here. Thank you so much. Have a nice evening. See you back tomorrow morning.
Operating margin of 14.4%,
Bye-bye.
a beat on the estimate of 11.9%.
Yeah, if I were trading, I would wait for some kind of a rejection. Specific number if you want to know. This area.
This is again seeing
this
shares
is
of
area
Meta
actually a
sinking
good
9% as a midpoint of third quarter sales outlook misses estimates.
Yeah, this area could be a good shot. Okay, whatever. I'll take one shot before I leave.
Also, just some other little tidbits from Meta. Meta's quarter included $1.18 billion severance expenses on May job cuts. Microsoft says fourth quarter OpenAI investment impact on EPS is minus 7 cents.
Stop filled.
Anyway, I'm done guys. I'm done for the day.
Fiscal year
See you back tomorrow.
EPS
Thanks and bye-bye.
$2.55 to $2.65 compared to the estimate of $2.25 to $2.45.